Hi. So I've recently came across this podcast episode between William Greens and Howard Marks. And for those of you who don't know, William Greens, if you look at his background closely, he's the author of that book Richer, Wiser, Happier. And for Howard Marks' case, he's considered one of the greatest investors out there, with many of his very famous lectures getting millions and millions of views. So in this specific video, I'm not going to play the entire 1 hour 30-minute podcast and just provide my commentary. That's not it. I know a lot of you have an attention span that is arguably better than a goldfish because you're on YouTube and not TikTok. Anyway, I just wanted to take this chance to really dive deeper into Howard Marks's thinking in terms of how you should view investing in China. So let's get started.
How would you think about China in that kind of nuanced way, where you're looking at both the dangers and the promise of the situation, right, and kind of trying to assign probabilities?
Yes. Well, one of my heroes was Peter Bernstein, the investment philosopher who died around 09, I believe. And he wrote a memo, which is one of the greatest things I ever read, called Can we reduce risk? Can risk be reduced to a number? And one of the things in there he said, there's a range. We don't know where the answer is going to fall within the range. Sometimes we don't know the extent of the range. China the range is enormous because we're dealing with cosmic questions. And by the way, we think we can do economic analysis or financial analysis. These are not economic or financial questions. These are political, ideological, social questions.
I really love how Howard Marks put this idea across, where when we are talking about this new evolution and there's this new development and there's a destruction in terms of world power and economic powers in the world today, it is indeed cosmic questions, because at least in the last 100 to 200 years, everybody was under the assumption that the Western way is the only way. It's either my way or the highway. But evidently, given the developments over the last 30 years for China, it has brought a great deal of prosperity to a lot of the people in the world, specifically, not only to the Chinese citizens. So when there's great rivalry in terms of ideology, in terms of how to govern, then it will be extremely interesting times ahead.
And but it's an important question because China is the second biggest economy in the world. And I have friends who can tell me the date on which it will become the biggest economy in the world. I've always thought you should have money invested in China. And, one of the things I've seen over my years in this business is something comes up, whether it be index funds or emerging markets or something like that. And people say, oh, we got that covered. I got 2% in that. If it's important, 2% is not enough. It won't move the needle.
I want to just repeat, if it's important, 2% is not enough. Which begs the question, where a lot of people, or at least a lot of responsible people, telling you that, hey, on a portfolio construction basis, everybody say that, oh, I have a limited exposure in cryptocurrency. Maybe I have 2% in Bitcoin, I have 2% in Ethereum, and maybe I limit my maximum exposure to the entire crypto space by 5%. Is it enough to move the needle? I don't know. It feels like many of the people in that space are just commenting for the plausibility of the eventual doomsday of fiat currency, and they're just hedging their position. But if, let's say, there is such an eventual doomsday and the rest of your portfolio just goes to zero because fiat currency is just useless and everybody starts trading with Bitcoin, with Ethereum, or whatever coins out there instead, how is it going to hedge a portfolio with just 5% exposure? So I guess from the perspective of Howard, it just feels like it's not important enough. Just a food for thought.
Needle. Now, people are happy with 2% because they, at least if it then goes on to quadruple, they can say, I participated. They don't have to kick themselves. But it's not enough. And so if China is going to become the world's biggest economy, and if things work out in a positive way in the long run, 2% in China is not enough, in my opinion. And as you say, we've had investments in Chinese equities. We've been long-term investors in Chinese NPLs, and we're investors in Chinese credits, debts. How do you dope it out? Not easy. On the one hand, you do.
I would argue that they probably haven't even have a proper framework yet into really understanding the risk reward from investing in China. They can come up with models, they can come up with numbers, they can come up with how they crunch all the different data points. But at the end of the day, I would believe that a lot of all this tail end risks cannot be diversified away. There are many arguments online, regardless on whether it's on YouTube, Reddit, etc. Everybody is saying, or everybody is touting the possibility that, hey, the CCP can rug pull you because likewise, just back in the last 50, 60, 70 years, when the CCP took over, he essentially robbed all the assets from all the rich people in China back then. So what's stopping them from doing it again? So these are, like Howard says, they are cosmic questions, and these sort of risks cannot be understood with today's framework and today's mental model.
Who have the economic strength, size, and growth potential. On the other hand, you have the question of how will China behave towards its citizens, its businesses, and towards the rest of the world. And so in the last 6 months or so, we've seen people say China is not investable. That's the word, uninvestable. Now, my ears perk up when I hear that, because if nothing else, it introduces the possibility that China is cheap. By definition, nothing that people describe as uninvestable can be borne aloft on the winds of adoration. It's not overpriced. Maybe it's underpriced. Maybe it's something one should do. I'm not an expert in China. When I go to China, and they always say to me, well, what do you think about China? I said, why are you asking me? You live here. But it has been my view for the last half a dozen years. What I tell people is that Europe and Japan are economic senior citizens, not much vitality. The US is a mature economic adult, doing fine, but I would argue that the best decades are behind us. China is an economic adolescent. And if you've ever had an adolescent in your house, as I have, then you know it can be tempestuous. And there are ups and downs.
I think he forgot to mention India. I think India is also in the adolescent stage. But the key differences in terms of the two largest economies with arguably the biggest population, India and China, it's the difference in terms of the systems, ideology, conditions, business environment, the list goes on. So there is definitely a reason why China was able to pick up many of all their so-called growths in the last 30 odd years. And I think the interesting fact that for those of you who didn't really study or dig deeper into the histories of the world, I think many of us in the current civilization thinks that whatever that transpired within the last 100 to 200 years is the norm. But actually, in this specific point in time, we're actually part of the anomaly. So just to share with you a graph that I recently pulled out, it was a very interesting observation. Since the late 1800s, and if you were to drag back all the way to the starting of, I don't know, 180 or just 1,000 years ago, China and India actually makes up 50% of the global economy and GDP. And you have to use just normal logical sense to think about it. They have the biggest population and the populace in the world. The two of them accounts for at least 2.5 billion out of 7 billion of the world population. They are situated in a very favorable environment. There is a reason why they are one of the most populous countries in the world, despite not having the biggest land mass. Whether is it livable or not, that's another question. And also, there is a reason why there is such a phenomenon. However, in the last 100 to 200 years, we can see that the Western Empire, namely the UK, the US, even previously in Europe, where they had colonies around the world, that's when you see this huge spike in terms of GDP share. However, at least in the last 30 years, China is slowly taking up their position again. And people are currently claiming that, hey, this is an anomaly. China shouldn't be able to rise up to the top. And these are all just historical arguments. But yes, let's go back to the video.
But you also know that the adolescent's best decades lie ahead. And I describe China as an adolescent, economically speaking. This is an example of the ups and downs that I was talking about. Now, I didn't envision anything in particular, but when they come down on for-profit education, et cetera, and when the world worries about them geopolitically and militarily, that's what we're talking about here. When you get into the adolescence and the new things, stuff can happen. I happen to be positive on China. By the way, just like you couldn't prove the day after the Lehman bankruptcy that the financial system was not going to melt down, you can't prove what China's future holds. I happen to believe that China wants to be a member of the world community, and that Shanghai, for example, wants to be one of the world's centers of finance.
I think just to provide my opinion on this perspective about whether China is going to be a contributing member, whether they are going to work as a team in the world stage, etc. Chairman Xi actually floated this idea of called, in Chinese it's called 世界村. And if you were to just do a direct translation, it's called global village, if I'm not wrong. So thinking from that perspective, of course, it feels like China wants to be a contributing member. They want to be part of a bigger thing and having a greater identity and to solve all the big challenges in the world. Climate change, poverty, making more technological development, making the world a more prosperous place for everyone, live standard of living, etc., etc. There's so much good things to look forward to. But I think there has been a huge deal of geopolitical tensions, especially if you were to look back. I did saw this political commentary some time back when the world order was constructed back in, I don't know, the 1800s or the 1900s, when the Western global powers are taking charge of the world. Many of the up and rising global powers, for example China and India specifically, a lot of their interests are not taken into account. So when you are playing by this different set of rules, where your interest is not taken into account when the system was first created, of course, would you be happy about it? I mean, have some empathy, think about it from the perspective of the Chinese, the Indians, etc. And when essentially the system is rigged against your favor and odds are stacked against you, and when you are powerless, of course you'll just keep quiet, have fun with the world and just play along with the system. But when you start drawing economic powers, military powers, technology powers, then of course you will definitely fight back and try to fight for a more equal standing and to try to fight for a better world from your perspective. Which is why you can see that there is this new associations in terms of BRICS. Would this be a new consolidation of powers in the eastern bloc of the globe, where they want to have some sort of check and balance to the current world power? We don't know, and things are playing out in real time. So a lot of these things are quite fascinating. And for me to write off, and for many people to write off saying that, the Chinese yuan or the Chinese renminbi won't replace the global reserve currency. Nobody's arguing for a replacement of global reserve currency. Oh, the Chinese military sucks. Oh, they can't do this, they can't do that, etc. I'll just urge all this group of people to just maybe brush up a little in terms of trying to consume some of the propaganda content from China. Look at the technological advancement. Try to talk to some of the Chinese people in China, if you actually dare to even travel to China, because you probably are scared that you'll be censored. You can go there, have a chat, don't be so aggressive. I don't think they will shut you down. After visiting, come back to the US or to wherever you are from and make a video about it. Nobody's stopping you to make a video about China and just upload it. But I would just urge people to not bring predispositions to the table and frame your thinking in a way where they just suck and we are the best. If you come to the table with that frame of thinking, then everything would suck. Only you are the best, and that will probably be the eventual downfall if you always think that you are the best and everybody else should learn from you. And it's always this superiority complex that causes the downfall of many people. And history keeps repeating itself.
And it would take a great leap of the imagination to think that those goals can be achieved if China does some of the geopolitical things people are afraid of them doing. So
for a regular investor who doesn't have your advantages of a
yes.
team based in Hong Kong and a team in Shanghai and the ability to invest in, toxic property that may be selling incredibly cheap, for regular people like me, is the smart thing just to buy an index fund that invests in China or in China, South Korea, India, or like what would be the smart kind of long-term play if you just wanted to tuck something away?
Especially here in 2022, when, as Andrew points out, readily available quantitative information about the present cannot be the road to superior performance. Most people should invest. Well, first of all, they should invest through others, whether it's an index fund, an ETF, or an actively managed account. We don't do our own legal work, dental work, medical work. We don't fix our own cars. Why should we manage our own money? Why should we believe that we have the ability as part-timers to do that? So the amateur should basically pick funds and managers, in my opinions. And as you say, you want to go into a global fund that includes China under their charter. That's what I think they should do.
To slightly push back this point a little, even though I have great respects for Howard, I do agree with his commentary about people don't become their own doctors, they're not their own lawyers, and you hire the specific professional people in that specific domain of work because they've put in the hours, they've put in the study, and they are best able to help you manage whatever problems that you have. But that being said, I think in the entire finance industry, at least, there are probably many layers of conflict of interest, especially actively managed funds. So then comes the question, should you do your own investments, and should you look into the market and manage your own portfolio? I think the answer is yes and no. If you have an interest in this space, I don't see why. Similarly, if I have an interest in cars, it doesn't stop me from fixing my own car, but I have to bear the consequences of screwing up my own car. Similarly, if I screw up my own investments, I will have to take responsibility for that. That's the first point. Second point, I think in terms of finance industry as a whole, like I alluded previously about this idea of a conflict of interest, where even though there's been many financial innovations and regulations being put in place to try to eradicate many of these said conflicts of interest, however, after studying it for quite some time, I think it's still plagued with many problems, and the normal layman consumers have no understanding about it. So which is why I always constantly preach that, hey, if you don't know what you're doing, just put a majority of your wealth or majority of your fund into S&P 500 or broad-based world index. Which comes to the third point, talking about the world index. Howard did suggest that, hey, you should look into an index that doesn't only just comply or doesn't only just constitute maybe the US funds or developed funds. You should also probably explore a little bit into the emerging markets, like having exposure in India and China, etc. All I would like to say is this: even if you look at established funds or established indexes like Vanguard Total, I think the exposure to China and India is still extremely minimal. So if I'm not wrong, even for VT specifically, they probably have like 60% exposure to US markets, and if I'm not wrong, don't quote me on this, but around 10% in China, 10% in other emerging markets, and yeah, give or take, they have Europe, Japan, etc. So if you were to really look at it from that perspective, a huge part of your risk is still congregated in one region or a few regions. And the diversification, I'm not too sure how effective would it be, but only time will tell. And so, if you really want to gain exposure in, for example, Southeast Asia, in China, in India, I think it's better to probably do the allocation yourself from a strategic asset allocation point of view. And just solely buy into probably a Chinese fund, an Indian fund, or Southeast Asia fund, rather than just buy one as a whole package and just hopes for the better that the investment manager is able to do their magic. So I digress a little, but back to the video.
Should think twice before dabbling in areas they don't know about. And if I were a professional and I wanted to, what would you say, try a punt on China, I would go into a fund. I wouldn't start picking companies I don't know anything about in a country I don't know anything about. Again, man has to know his limitations.
I think it's a great way to end the video. Man has to know his limitations, but I think it doesn't kill if you have some imagination. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!